Yes, I believe this is the right call because markets are already nervous about the rates. They are high, economy is slowing down, but we have a task to achieve, that is to lower inflation. Inflation recently hit 80%. It is now down to 52%, but you have a lot of base effects in play. So you need to have a firm and consistent and clear and relatively hawkish central bank policy here. One expectation is, of course, from different market participants and industrials, perhaps, is for the central bank to lower the rates. But I think Turkey can't afford that at the moment. I think first you need to control inflation, and I think the central bank is on the right path by not lowering its policy rate. However, we already started seeing signs of economic slowdown. That's one thing to keep in mind. On salaries, we are seeing a slowdown, but on services, we are not seeing any slowdown. So that was also one of the elements of that language change. Earlier, the central bank was guiding for a lag in transmission mechanisms and services inflation to ease, but now they are guiding for the fourth quarter. So there were two elements of somewhat less hawkish or preparing grounds for rate cuts in the future. Number one, you mentioned they dropped the line of interest rate cuts, further tightening, and they replaced it by using of monetary policy tools. And number two, I think, is that there is now more visibility on easing of services inflation. So I think we can say they are on the right path.
Indeed. And when it comes to attracting more foreign investment, it seems like there is a lot more credibility in Turkey's current economic team, both on the fiscal side and on the monetary policy side as well. And that has really helped to firm up confidence in the economy. One question I have, though, is on the outlook for the lira here, because, of course, no easy task for policymakers on both sides in Turkey, not just stabilizing the economic growth side, but also ensuring currency stability. So what does the lira outlook look like from here, in your view, and how is it ultimately going to be influencing the next central bank decision?
Yes, it is indeed mission impossible. We have been taking the low-hanging fruit so far because we are coming from a very low base in Turkey, right? You have very high inflation, growth was very high, economy had to cool off. And central bank reserves, that's a very important point when looking at the lira going forward. Central bank reserves were in deep net negative. Only 6 months ago, we had minus $20 billion of deep net negative central bank reserves, net of other liabilities, short-term liabilities, and now it's plus. So we are talking about rebuilding of reserves, we are talking about easing of inflation. And going forward for the lira, I think central bank has much control on the currency now with reinforced reserves. And number two, I think communication has been pretty clear about lira appreciation. This was also mentioned in the latest statement after yesterday's meeting. So lira appreciation, real lira appreciation is here to continue. But we'll most likely see a continuation of nominal lira depreciation. Lira has been depreciating year to date. But there has been real appreciation. So I think going forward in the next 6 to 9 months, we can expect further lira depreciation in nominal terms. But when you look at the interest rate environment, net, we are looking at a very well-controlled lira, maybe feeding into lower inflation as well, and real appreciation to continue.